Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going on there? It's June 26th. And I'm Frank Curzio, just a Wall Street Unplugged podcast. We're bringing the headlines and tell you what's really moving these markets. So on today's show, Rivian gets a $5 billion lifeline. FedEx stock surges despite core results not being all that great. And a list of stocks every single investor should have in their portfolio right now. But first, let's bring in Daniel Kreese, Senior Research Analyst, Curzio Research. Daniel, what's going on, man?
Hello, Frank. Happy Wednesday. How are you? Everything is good?
Everything is good. Florida won, right? So,
yes.
Panthers, big celebration.
First Stanley
in Florida.
Cup ever. That's exciting.
You know, it was a great game. Holy cow, was that a great game? It was such a great game. Compared to I'm watching Soccer, Copa, and there was two games yesterday I watched. Imagine paying probably $1,000 to go. There's two different games yesterday, and they both ended in a 0-0 tie. What are you cheering at? In soccer. What are you cheering at? I know how big these tournaments are, and you want to watch them. And U.S. again, nice early win, but you're there an entire game without a team scoring, right? For the sport, it's just
that's part of that sport, though, right?
It is.
I know zero about that sport. I don't follow it. I'm not in.
I'm
not the guy that says they're not athletes and it's not a sport. I'm just the guy that says, meh.
No, yeah, I mean, maybe some of the best athletes.
But that's part of it, yeah.
It's just watching it.
You have to go into that knowing you might not see a simple goal. That's weird.
Yeah, it is weird. I mean, it's hard.
The Stanley Cup was awesome. I listened to it. Man, those guys on the radio are hilarious. I love that. And did you see, what stuck out to me was the last seconds, there's such a great commercial that the NHL was running, and it's a montage of the last seconds of people during the third period. They showed Mark Messier and his famous jumping up and down.
Right,
that was obviously afterwards.
About to win it, yep.
But they show a lot of people. And what was cool is that, when Florida won it, it was in their own zone, so the goalie had to be locked in. He was kind of knelt down against the left post. Everybody was in the corner. But then you could just see everybody kind of start jumping. Once it got to 2 seconds, it's like, man, this is going to happen. The interesting thing to me, what I really thought was classy, is that the Florida coach, did you hear his comments about if he had one more wish, because he's been coaching, 25-ish years, never had a Stanley Cup.
Yep.
And he said, man, my only wish would be if Winnipeg could win it next year. Now, I would love to have some hot mics on, because if I'm a Florida fan, it's like Larry Bird and the Boston Celtics saying, the only place I'd rather be is French Lick, Indiana. They're like, get out of here. We want you to talk about us right now, I love that, because he's passionate. He was up there for so long. But I could just imagine some Florida fans going, the Florida did he just say? We're not even done celebrating, The champagne's not even out of the bottle. Yeah. But good stuff there.
Yeah, it was really good. Really good game. They did a great job there.
I'll tell you, Frank, I was going to leave you high and dry here. I was going to take a spur-of-the-moment trip, but every airline is evidently sold out. And I want to ask you, Frank, where in the Florida are people going? Because did you see the record TSA screening passengers of 2.99 million, not 3 million, don't round up, 2.99 million this past Sunday? I ask you again, where in the Florida are people going, Frank?
That was a record. And I got to tell you, the airlines are not prepared for this at all. They weren't for you to have a record, and what is it? Is it like the past 3 records or within the past month or something?
Yeah, it's ridiculous.
It's insane of how many people.
I understand coming up to the 4th of July. I expect every holiday gets busy, but this last weekend, and I just pulled this up from Yahoo Finance. TSA predicts to scan 32 million people between June 27th and July 8th, an increase of 5.4% year over year. Mm-hmm. 32 million passengers. I like how this article says, they tout how, hey, this is a healthy, strong economy. That's the TSA administrator, David Pekoski says. I get that. He's plugging it for his administration. But then at the very end of this article, Frank, they said, hey, get there on time, be patient, blah, blah, blah. But don't expect your flight to take off on time.
No, and my wife could attest to this, because she's been flying back and forth to New York the past couple of weeks. She was there the last 10 days. So I was like, minding the fort with the kids and everything by myself for 10 days and working and doing all the stuff, which, you start realizing how important your wife is. But you don't want to tell her that kind of, you don't want to admit that at all. It's not a good thing. You
Hopefully she
want to
doesn't
make it
listen
as
to the
easy as
podcast.
possible. Like when she calls, I'm always like, things are great. Why? What's up? She's like, are you sure? I'm like, they're great. The kids are fine. Everything's great. What's the matter? You just relax. And when I get off the
Meanwhile,
phone,
fire started in the
when I
backyard.
get off the phone, I'm like, holy shit. So
These
my job-
monsters I live with.
yeah, my job is to make it seem like everything's perfect here without you, right? But she traveled back to New York. Her flight got canceled on the way there and on the way back. She had to leave instead of Saturday. And so this was like 2 weeks ago. She had to go back there again. Mom isn't too well. And the flight on the way back, it was supposed to leave at 6. Then they said 6:30, 7, 8. No, I mean, it was like, and it just kept pushing along. Then it went to like 9, and then I know it went, okay, 8:20. And that was kind of like in this, right? I think this is whatever it was, Saturday or Sunday. So she came back, I think, Saturday. But I don't think the airlines are prepared for this. And you're seeing delays across the board. And you're seeing just on Twitter, people that are traveling, you talk to people that travel in the past couple of weeks, it's been a nightmare, right? So it's going to be interesting to see how they ramp this up because the experience hasn't been that good. But it really doesn't matter because, you don't say monopoly because monopoly's won, but you can't start an airline, right? It's impossible to start a new airline. You can't. It's probably the highest barriers of entry to any industry in the world, even more than EVs or anything else. You can't. Just to get to airports, to space and stuff, it's impossible. So, you lock them in, and plus you have a lot of places not doing that well, where Southwest is a disaster right now in terms of, just even they lowered their numbers. You have JetBlue, which, their planes are pretty much, their original fleet from whatever the company came out 30, 40 years ago, still original fleet. I don't even think they updated it. But then you have like Delta, and Delta's doing good. But more to the point here is you're seeing not just through the airlines, you're seeing all kinds of trips, travel, leisure, and that's where the money's going. Because, did you see Carnival? I mean, Carnival blew the numbers out as well. And same report here. This is TSA and also AAA. They're saying that over 70 million people will travel 50 miles or more for the week of July 4th, right? So that includes the airlines and everything, but 70 million people. And then Carnival came out and blew out the numbers, which was no surprise, right? Because we have one of these names in our portfolio that, if you look at the cruise lines, and even when you have the Expedias, when you have the Disneys, Disney does have a cruise line, but a lot of travel companies are citing that they're losing business to the cruises because to go on a cruise with a family is so much cheaper than even going to Disney. I mean, it's like a 30% difference. And you could really have a nice room, nice vacation. I wouldn't go as far as exclusive, but it's a really, like you could upgrade your trip and it will be an awesome trip through a cruise. So Carnival came out and their numbers were amazing. And you're seeing this across the world with airlines, but I guess, is it a sign the economy is doing better? Or is it just a sign people are really careful where they're spending? And where they're spending is definitely more on leisure, more on the travel part, more on experiences. And you're seeing that across the board, almost, every industry, or every segment of this industry, I should say.
Yeah, what's wild to me is that in Delta, they're obviously doing well. The management teams on the airlines, specifically Delta and Carnival Cruises, Carnival Cruises came out and upped earnings per share 20%. That's crazy.
Yeah.
That's a ton.
Yeah.
That's a great beat and race, 20%. And they keep saying
sales rose by 17%, right? So sales rose by 17%, and then they're raising their earnings per share by 20%. 2 straight quarters where I think they were projected to report losses probably about 3-4 months ago, and they're both, strong quarters, very strong quarters. So it's pretty amazing what they're doing. Yeah.
And what's frustrating, and I'll admit kind of confusing, when you look at Delta, it's the premium airline, no doubt. Their stock's doing pretty well, close to a 52-week highs. Mm-hmm. You pull up a weekly or longer-term chart, it's terrible. It's still well below 2019 levels. I get it. They had to take on a lot of debt. Same with cruises, though. When is all the management upbeat and the results? Because now you can't say Carnival's a wait-and-see story. Yeah. They're putting up the numbers. The stock is still crushed from 2020 levels, 2019 levels.
And they're reporting
American
the best
Airlines
results.
Sucks.
Their
stock is terrible.
Yeah, I'm not sure about American Airlines. Delta.
Well, I'm looking at the stock chart. It's
probably
terrible.
single-digit PE for Delta. Seeing earnings growth, paying a huge dividend, right? And you're looking at the cruise lines. Just probably, I wouldn't argue. I think it's pretty much factual that the best shape in that they've ever been in financially. You're seeing demand through the roof. They have pricing power, right? They're taking this money, they're able to lower debt. And you're going to see it reflected in the stock price sooner or later. It hasn't really been, and I think you could buy any one of them, but the one in our portfolio we really, really like, I won't give that away because people pay for it. But a great industry. But I would tell you with Delta, it's interesting because Delta is very expensive. Delta's very expensive. Especially if you want to say, well, I want to take a trip first class. You look at first class compared to United American, holy cow, it's a big difference. It's a big difference. But Delta provides a good experience. So if you have a better experience, and I don't know if that experience is good for everyone. It's good for me a lot of times because that hub is right here. It's in
I was going to
Atlanta.
say,
So we
go
get
to
the newest
Atlanta.
planes here, and every time I fly, it's great Wi-Fi. It's great. The planes are new. It's beautiful. Leg room, but sometimes when you're flying Delta other places, and again, you have the hubs different in Chicago and Dallas, United and American and stuff in New York. My point is this brings me back to companies where you look for companies that have pricing power, where Delta has it, and they're able to pass the higher costs off the consumer. They have pricing power, raising prices. And then you look at a company a little bit outside this industry like Starbucks, and people were like, well, their prices are insane because, the stock has been crashing. There's a big difference that you have to look at these companies. It's not necessarily they don't have pricing power. And again, I'm going to compare apples to apples because it's apples and oranges when I'm comparing industries. The point is, when I looked at Starbucks, the reason it's not because of their high prices of coffee. Okay, everyone's like, "Well, I'm not going to pay those high prices." Would they? It's not that. It's because their service turned out to be terrible. Because when you have that app on Starbucks and you're able to order, and you're in the morning, right? You're rushing, and this is 3 different Starbucks that I go to for my daughters when I drop them off, or if we get something. We used to go there a lot more. We don't go there because when we order through the app, we used to go there, just run and pick it up and go, right? Because we're on the go. We used to go there, and it was like, we'd order like 15 minutes earlier. And we had to wait another 10 minutes. And there was a long, and there was like 20 people at the counter in almost every single place. And I guess hiring new employees. The thing is, what I'm saying is not to get off topic, but you're looking at Delta. You're going to have pricing power if you provide a good experience. JetBlue's not going to provide a good experience for you. Southwest isn't going to provide a good experience for you. And that's an easy way to tell what stock's going to benefit the most. Because if you're having that good experience, people will pay extra for a better experience. They'll pay extra for better food. But now we're in a market where people are trying to raise prices and the service is worse because you can't get good employment. You can't get, again, the lack of employment in the services industry. You can say that across the board, the restaurants that you go to, the service is definitely not as good, but the prices are a lot higher. That's going to be a story going forward in the inflation argument because people are definitely cutting back. They're trying to see where they want to spend, and you're seeing it less in leisure, less in things like Dave & Buster's, right? Dave & Buster's stock has cratered. You're looking at Five Below is another one, and yet they're like, okay, we'd rather go in these experience and go in Carnival and go in these things. You're seeing that trend, and man, it's continuing. So you could argue how the economy is doing, if you think it's doing bad or good or whatever, but there's definitely this underlying massive trend going to travel. People want that experience in traveling, and you're seeing it across the board.
I think the big takeaway here is how powerful human emotion is. And I think you're right. You can't have management. I mean, you can for a long time. And I don't want to get caught up in this instant gratification, but I do think it's important to point out because I fall victim to this. How can you listen to cruise lines talk so upbeat and put up results and Delta and raise their dividend and do all this and the stock basically do nothing? Well, it can happen for a long time. And I fall into that too, where you think, man, if then happens, type deal. Just because it hasn't happened yet, if you hold these stocks, mind your stops, look at your position sizing, but don't give up on them because to your point, I don't want to put words in your mouth, but you can't continue to have these robust results and have a lackluster stock. You can have that discrepancy for some time, but don't fall in that instant gratification or if this doesn't happen overnight, this doesn't happen. That's the good thing about stocks. They don't go away. It's not an option. This doesn't expire anytime.
No, it's about rotation, right? Because then
exactly.
What are you going to do?
And at some point, that has to come through. It doesn't have to, but you understand what I'm saying. If they keep putting these results up, it's going to reward those shareholders. If I was going to play it, you'd stick to Delta, you'd stick to the cruise lines. But I think the emotional side that I'm so interested in is we're still getting back this revenge travel. You can look at credit cards and debts and all that crap and inflation and prices. People will spend money for experiences and do things. They were locked down, and we are still seeing that kind of revenge travel. And this just shows people want experiences, need experiences, and will pay through the nose and stand in line with 3 million people, Frank.
Yeah, I know, it is crazy. It is crazy. And you're seeing that kind of demand. So, no, it is pretty incredible. It's pretty incredible. So look, I don't see that trend slowing anytime soon. And you were saying in regards to the stocks, right? It like eventually show up. Listen, okay, so from a Wall Street perspective, you have all these money managers. It's important, it's relevant. And say if I'm managing money, I manage $1 billion, right? If I want all that capital invested, because if it's not, I don't get fees on it. If it's in cash, I don't get fees, right? So you want to, and that's something to look at private equity because they have hundreds of billions of dollars, literally in dry powder, right? So what am I going to do is right now I might be in large cap tech, I might be in oil, but now tech, you're seeing a little bit of a crack there, right? NVIDIA, you would think it's down 40%. It's down like, 7% from its highs. And everybody's like, oh my God, it lost 400 billion in value, yet, it's up like 2 trillion valuation, like a year and a half. And when you see the rotation, what are they going to look for? They're going to look for these sectors that are seeing strong earnings growth, strong demand. The numbers are good, and stocks that are not really pricing this in, that are cheaper. And that's one of the sectors you're going to see. You're going to say, you know what? I'm going to rotate into cruises, and that's what you're going to see. Just like you rotated in and out of oil, right? The oil was a little hot, and now you might see it pull back a little bit. Even though gasoline prices are through the freaking roof. I don't know if you saw that. It's paying $3.05 here. It's 2 weeks ago. It's $3.50 now. But that's how I would play it, the rotation, like you said. Just to add to your point, Daniel, is eventually, it's going to be reflected in these stocks because these guys are putting up great numbers. They're raising guidance significantly. We'll talk about another stock in a minute, which is FedEx, which didn't raise guidance, and the quarter was okay, and that's up a lot. But
the lesson here is if you're not holding on and justifying, if you're not down a ton, then nothing new here is, and just keep until your thesis enacts. And like I said, you have the news on your side. It will eventually, or it should. The odds are in your favor on that.
Yeah.
If you're down 40%, you just keep saying, I'm not wrong, I'm not wrong. That's a totally different story.
and it's different because this isn't a cost cutting
right,
story,
exactly.
Which is
it's
big.
Demand.
This isn't a cost cutting. This is
Exactly.
massive demand
That's a good
that
point.
they're saying. And that trend just doesn't reverse, especially in that industry. But I want to move on to the debate, which we have to talk about, right? And people cringe. Because they're like, oh my God, Kurt's going to talk politics. You separate the audience right away, right?
Debate coming in hot.
So debate's coming up. It's coming in Thursday. And they're going to be talking about a lot of hot topics. I want to get your thoughts on it because I think there's going to be a lot of things being said that's going to be, they're going to move portfolios. And people say, well, there's not too much of a difference in terms of, your allocation in some of these areas, but it's definitely sectors you could highlight in terms of solar, in terms of, if Trump, I would see less investments to alternative energy, more investments towards drilling and oil. Obviously, I mean, he's really going all in on crypto now, right? And he's believable because he's getting massive donations. And that's the crowd you don't want to fuck with, because if you say you're going to do something, don't do it. Those guys will post 50 billion posts on social media and destroy your ass, right? I mean, these are passionate people, and he's all in. He's meeting with all the crypto crowd to the point where diehard Democrats are now saying, who own crypto companies like the Novogratz and stuff, are saying like, what do I want? Do I want to just destroy my company? Because right now we see Biden clearly going after crypto companies and has, just no, you're not going to see any regulation from him, right? We didn't see for 4 years, right? We haven't seen any regulation, nothing. And not only did you not see regulation, you saw him start going after these companies and suing them, right? And that's where you had that major turn where it's not like, hey, we're waiting for you. It's now you're coming after us. You're closing banks that are doing business with crypto and forcing this. So, and the Winklevoss twins actually said that in their post on Twitter, if you follow them, of the reason why they're voting for Donald Trump. So a lot of issues at stake. What are you expecting?
I think Biden is going to do very well. I think that he is going to prepare for it. He's cleared his schedule. I think that Biden is definitely slowing down. You can't look at the guy and not have some serious concerns just as a human. Now, I don't give him much credit because that's a terrible environment. I'm a big guy on, hey, context matters, the environment matters. When you're talking about politicians, they don't deserve the benefit of the doubt. They don't deserve your grace. That's why I respect you, Frank. One reason I do, because you are a much nicer person than I am in that front. You believe in people a lot more than I do. That's fine. My point is that you can't deny this gentleman is slowing down. Everybody around as you get older does. I also think that he is an excellent politician. He's a career politician. And I think that he plays up the old Uncle Joe or the crazy guy a little bit. And we've already seen this this act play out. During the last presidential race, the first debate, I think it's going to go the same way. I think Trump's going to be so angry and fired up. He's not going to be able to control himself. He's got a few list of insults he wants to get out. I would love to see both guys come out and really be a much more tame, relaxed guy, but that's not the game they play. I don't think Biden is going to look gone. Watch him have a freeze or do a Mitch McConnell and just freak out on stage and make me look bad. I think he's going to do really well. I think he's going to have all of his ducks in a row, and they can hit the economy very hard. And what I also want to talk about is I think you're right on the crypto aspect. I think crypto will move more than anything other space. One, because it's volatile by nature. I understand that. But really, when you look at Trump and Biden, there's not a whole lot of differences on the economy. And you know where I'm coming from on the deficit side. If you're spending $1.5 to $2 trillion a year in deficits, that's not going to change depending on if Trump's in office or if Biden's in office. And I personally think that that's terrible, but it doesn't matter what Daniel Creech thinks. I think that that's going to be a goose to stocks. The real big differences they have are on social issues. And I'm not saying that those aren't important. You guys should all think for yourselves. I'm not telling you how to think. My point is that social issues are not economic issues. And we're talking about stocks here and equities and different cryptos and things like that. I think that Biden will hit him hard on debt. I don't know, Frank, people call me a conspiracy theory. I just put things and pay attention. There's no coincidences in politics. If you've noticed just this week, you're seeing a lot of this narrative building around Trump added twice the amount of debt than Biden did during his tenure. Okay, that's going to be a talking point. Guaranteed that comes up in the debate. You're going to see the economy and strong jobs numbers. Of course, you're going to do it. Now, forget the fact that you laid them off and just got them back from COVID, the authoritarian, terrible decision to lock down, and that was under Trump. You know what really shocks me about the vaccine, though, Frank? With all the negativity coming around the vaccine now, why is Trump not getting blamed for it? He was bragging about warp speed and all this kind of stuff. Mm-hmm. And now you have a lot of data coming out there that was shunned and shoved under the rug, and you were fired from your job if you decided not to take it, and that my body, my choice bull crap went out the window when it came to this shot. But yet, I expect Biden to kind of point the finger at Trump and say that, hey, if you're upset with the vaccine or any illnesses or whatever, why not point the blame on Trump? And so I think that's going to be a couple of big highlights there. I do think Biden will do better than people, because what I think is people are already saying, oh, he's going to act like a robot and they're going to get him off the ticket. That might happen. Anything could happen. I just don't think the percentages are there for that. I think this first debate will be kind of a lackluster thing. It'll be fun for guys like us to give our opinion and point out, how ridiculous they are. Mm. But the no audience thing just should piss everybody off. The fact that you have two people that are going to lead the free world that can't argue and debate in front of a live crowd is beyond pathetic, and everybody ought to think about that real hard, about what that means for the greater US of A, Frank.
Yeah. So, I'll say this. This is what this debate's all about. It's about how bad Joe Biden is right now in terms of his health. Any gaffes, anything that you've seen there, he's going to get pulled.
Do you think he's going to struggle, or do you think he's going to do well?
I think he'll.
What's your gut reaction? I think he's going to do well.
I think he's going to do well because he's going to get the questions, right? The questions are going to be easy, and it's not going to be like big follow-ups, right? So you're not going to have. He doesn't do well if you ask him something off the cuff.
Gotcha.
He doesn't. That's why even there's reporters coming out now. ESPN reporter, one of the ones. What's her name? Is it Steele? Is it Steele? Whatever her name is, saying that I got the question. I had questions before. She's like, I never did an interview like that in my life when I interviewed the president.
Oh right, yeah.
Biden. It was all scripted, and then she was restricted from asking any further up questions. Right? You can't ask any questions. She was like, okay. So basically, it's like a bullshit interview. But you're gonna know the topics going in to talk about, and you don't have to worry about, oh, well, what about this or that. I do kind of like the mute because. If you look at the latest debates, Trump just doesn't shut up sometimes. Just shut up. Like you're interrupting a guy when he says 4 words. Let them talk, and then you talk, and back and forth. But this, you're going to see the topics and everything. That's fine. This is about Biden because we've never had a presidential debate this early in the season before. I don't think ever, right? And there's a reason why. Usually, all this stuff starts after Labor Day, and the reason why is this is the opportunity where if he just stutters, if he makes a couple mistakes, and he's just out there, and it's so funny how they report like this is fake news. There's hundreds over the past, 9 months of him just not even knowing where he is. Not just, blah, 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 blah. If you 4 or 5, you say, okay, maybe they're cutting. You're watching these things and you're seeing, you're like, damn, it's like, this guy's really the president of the United States, right? How does he talk to other presidents? So especially when you saw Putin during that Tucker interview. You could think he's crazy. You could hate him. Man, that guy's sharp. Holy shit, was he sharp? Scary sharp, where you're looking at a dictator that's very sharp. You look at President Xi, very sharp. It's a leader of the free world. But that's what this debate really is all about. I don't think it's going to be, you know what their topics are going to be. You know what they're going to talk about. I just hate the fact that when you're wrong on something, no one ever misses a politician. I just watched, Senator Warren, Elizabeth Warren come out and talk about how the immigration is Trump's fault. Come on. You know why the illegals are into the country. We know why you did it. Yeah, it's just, own it, right? Don't blame, like, it's not Trump. He reversed all of his strategies. And, there's other things that can be attacked on Trump and back and forth. And I just think you're going to see the normal topics. He's going to talk about crypto, which I think would be a really, really big deal. And this is more about, hey, could Joe get through this? Yeah, could President Biden get through this? And if he does, and people feel confident, like he did, he was very angry during the what is it? The State of the Union. I mean, holy shit. I mean, he was so angry that it was like, I felt like he hated my guts as a Republican. Like, this guy really freaking hates my guts. And I'm like, I just have different opinion with you on a few major issues here. You know, it's not like I don't hate you, but it's like, I'm an enemy of the state. Right. So
you think there's a replacement factor if he has a
there's definitely a replacement factor. Yeah, because this is more because I don't think anyone's going to learn anything different from Trump. He's on the campaign trail. Everyone sees him. There's a lot of people seeing him. You're not going to learn anything different. You know, if he says something stupid, you're going to expect it, right? It's not going to result in anyone who's going to vote for Trump saying I'm not going to. But I think right now it's the moderate Democrats and you know, the ones that are kind of thinking because they're seeing this, you know, they're seeing his health deteriorate, you know, which is sad because he's older. But this is, can he get through this? And if he doesn't, I think they're going to be like, okay, we got to pull a plug on him and let's throw out another candidate and probably Newsom. So we'll see. But that's what this is really about. But pay attention to the crypto aspect. There should be questions on crypto.
I think crypto and the economy, there should be some, you know, there's definitely going to be some oil and gas and some clean energy talk. And those sectors will no doubt move a little bit. You already have the Inflation Reduction Act and any further promises there. But I do think you're right. I think crypto will move the most. And that's great for crypto in general and for everybody that has exposure to that.
Yeah, absolutely. Absolutely. So definitely pay attention. It's going to be, you're going to see a lot of ideas in your portfolio, especially as they get closer to the election. Marijuana, gambling, crypto, 3 industries. I mean, you see marijuana really do well. It's on the Florida ballot now. I mean, you know, more states are approving it. And saying, look, which makes sense, right? I mean, if anybody wants marijuana, they can get it within 10 minutes anyway, whether it's legal or illegal in your state. Just, you know, everyone has 20 people to call, right? So you can get it like immediately or a lot of them medicinal. Again, you could say, well, I don't. And before you even say anything, they're writing a prescription for you, right? So you might as well make it legal. This way you're making money off of it. But those are really hot topics going in. And the obvious ones would be like drilling and alternative energy and money funding to this stuff. But
stay tuned over the coming weeks. Trump may actually make me sell and get less bullish on the energy patch if some of that happens.
Maybe. So let's go to some earnings here, which were pretty crazy, right? I mean, you saw Pool, right? Low earnings. So mentioned in late April that interest rates have weighed heavily on their new pools that they're building. And this is the world's largest wholesale distributor of swimming pools, related backyard products, and they said it's reflected by a 15-20% drop in permits year over year in Q1. But I mean, this was a lot worse than they expected. They were expecting in their report and saying, hey, you know, we're going to see cutbacks. Now they're expecting their full year guidance, fiscal year 2024. They were projected their original estimates, and this is from February, right? Not long ago, $13, $14. Now it's looking like $11.25 around there. And that's a massive reduction, right? So you've seen the stock pull back. It was down a lot, and then I think it went down like 8%. It's been down in general. But I think this tells a really big story about housing here, right?
Yeah, I agree. I mean, the thing with Pool is it's not just a U.S. story. They're an international company. They do a lot of business globally. So take that with some salt. The thing that shocked me the most is, to your point, you come out in February, you give guidance. I understand you got to change when data changes. The takeaway, one of the big takeaways here is how fast the consumers can change. I mean, you've seen that with COVID, with inventory, with home furnishings to now travel and all that kind of thing. But man, consumers can change like fashion trends.
Think about that, what you just said. Great point. This isn't people buying sneakers. Yeah. This isn't people buying a certain product and saying, oh, shit, I can't afford it. These are people, they were basing their guidance on people locking in, like saying, hey, we're building a pool. And now people, instead of doing that, they're pulling back and saying, maybe not, or maybe I'm not going to buy this house, right? So, and you're seeing that actually in reports that were reported today too. New home sales were slower than expected. They said 9.3 months supply. It was 9.1 a month ago, right? So the supply is building. And they're building the supply because more people are saying lots of people are looking, but fewer people are actually buying. And you know, so when you're building these houses and you have these projections and stuff like that, you might see the home builders. I think the home builders might get caught offsides here too, because they're raising their estimates. They're building a lot more. They're able to restructure and provide incentives with a low interest rate for buyers and stuff compared to, you know, traditional mortgage 30-year, which is 7%. But it is interesting. Yeah, that you said that, because it does have implications for the entire housing industry. It really does. But these are contracts that got canceled, Daniel. Like, it seemed like this business was booked and now they're pulling back on it, which is a big difference from just a consumer pulling back and saying, I'm not going to spend that much next month.
And you're going to see a lot more of that, because we've joked around about this, not just something to pay attention to off air. When you see the amount of conference calls during the last quarter talk about efficiency, operations, and such like that, that's a hint at future layoffs. If you have more layoffs on the management side or managerial positions, higher white collar stuff, that's where a lot of your communities and such are going. So what I want to dig into a little bit more on the home buyers, because there's a few that I really like on this pullback, is your resale value are basically all cash, especially around here. Now, we're in a little bit of a pocket bubble, as you could say, on Amelia Island and some in Jacksonville. Essentially, your new home builds are for starter families and things like that. Maybe you have younger people because the developer, the builders can work with them. You can buy rates down, you build smaller houses, et cetera. But all the resale value around, Frank, is basically cash buyers. People my age aren't taking out 30-year 7% mortgages to go buy a house, unless it's a starter home and you're getting some help there. That'll be interesting. But with the pool side, the change there is, hey, from February, you drop 20% on your earnings per share guidance from February to now. That's significant. That's going to drag on, and everybody ought to be paying attention to the Home Depot and the Lowe's and the DIY, do it yourself, all that kind of stuff, DIY. Trends. I'm not saying the sky is falling, but this is just a process. And, we talk about this spill going into a river and it's flowing through the economy. Well, now you have elevated prices. Yes, some costs have come down, but people are living with this new elevated prices at the grocery, to the gas pump, to building materials, to labor, and all that kind of stuff. And you know what? When you hit your wall, you're going to pull it. Frank, real quick on Disney, there was an article a couple weeks ago where the average family was okay with taking out, and I'm rounding, let's just say $1,000 in credit card debt to take a family on vacation. Now, there's obviously two easy perspectives here. You can say, one, well, you're an idiot. You shouldn't go in debt for a stupid vacation like that. Two is, hey, if you value an experience with your family and justify that by that, that's fine. I'm not telling you whether that's right or wrong. Mm-hmm. The point is that at some point you hit that wall and you change like that. Mm-hmm. And you say, hey, I'm canceling this big purchase. We are really cutting back. And then companies have to come out. So just be cautious with that. There's a lot of juggling going on, and it's all held up by just silliness and deficit and goosing the gander here. So just be cautious on that, because the consumer is going to, and has proven, they change really, really quickly, Frank.
Yeah, no, they definitely do. And when I look at the results of this, and I know an insider in this industry, I mean, not really an insider, but he sells high-end furniture for pools, like in the pools and stuff like that. And he sells them like crazy. And he said, I told him, I was watching the game with him, the hockey game at his house. And he said, I told about Pool Corp. We just talk about, pools and stuff. And he's like, yeah, I deal with a lot of those companies. He's like, yeah, and demand's falling off a cliff. He's like, and I said, yeah, they just reported, because he doesn't really know stocks. He's like, wow, I could have told you that like 2 months ago, because we've seen orders drop tremendously. But it just goes to show you that when you're looking at housing, I think it's being masked here, that there's this industry that's really strong that's not. And I think you have to be very, very careful. Pool's not the only indication, but it's regardless what the stats say. For example, if you're looking at some of these stats, which is a joke, did you know? So they reported new home sales, and April new home sales, they just reported May, but April new home sales were revised from 634,000 to 698,000. That was a revision. That's a 9%, close to a 10% revision. Wow. Okay, stronger than expected. How the hell do you look at these numbers? Because now what happens? Now they reported for May, and what do you think happened in May? Now you see no home sales much lower. They're expecting a 2% gain, and it came in at an 11% decline.
That's
what the hell is going on with these numbers? I mean, you can't be reporting like, because right now, what does this mean? You're looking at, these numbers are down 11%, but they're really not down 11% because look at the massive revisions you had in April. But if you look at the Northeast alone, when you look at new home sales, they're down 43% Northeast alone. Demand for second home mortgages, which is a very, very big market, right, which drives home prices. It's at a 6-year low. Vacation home mortgage originations dropped 65% from 2021. Right, and down over 40% year over year. I mean, the affordability index. look, you're going to have people with cash always buying houses. No matter what, they're going to buy houses. What makes this market is, and increases the total addressable market, is having low interest rates, because now almost everyone can buy houses, right? It doesn't even matter. Oh, wait, you have a positive balance in your bank account? Fine. Okay, you're good, right? First time home buyer? Okay, fine. We'll lower the mortgage rate even more for you, right? Doesn't matter. When you're removing that portion of the market, which is this massive growth component, I can't. It's so many companies here. Like if you look at the Home Depots, the Lowe's, the appliance makers. I mean, look at throughout your house. You could name, just sit in your kitchen, open up a few cabinets, look at everything being made, and you could probably have like 30, 40, 50 companies that you can name. All those companies are going to see slowdowns. Okay, so even no matter what the stats, and some of these stats will come in better than expected, and you see the home builders doing better than expected in terms of their stock prices. Yes, they've recently pulled back, but still doing well considering interest rates have gone up so much. You have to be careful here. I mean, it's like this foundation is cracking, and it's cracking, and it's going to continue to until it breaks, and no one's really paying attention to it right now. And I feel like you really need to.
And then all of a sudden,
yeah, because everyone's like, it should be like this. Well, it is like that, but you know, again, there's certain components that are doing well and keeping it higher, and again, lower supply. You need more supplies for homes and stuff like that, but. Now you're seeing that supply go up because people aren't buying, because they just, the affordability index it's more unaffordable than it's ever been in history of housing. I want to talk about and get into another company I reported, which is FedEx. Okay, FedEx reported numbers and the stock's up 15%. Now, if you just look at that, you're like, holy shit, they just reported earnings. This is great. They did great. They didn't do great. If you look under the hood, earnings were up, I believe, 1% year over year. 1%. Earnings were up. They beat estimates by 1%, and their guidance, they kept their guidance in line. They didn't raise their guidance, and the stock's up 15%. You may be saying why. And I'm going to bring up a chart here. FedEx, see how much it's still up here. Yeah, so look at FedEx. It's still up like 14% here, and near it's at its 52-week high right now. Looking at, looks like an all-time high, almost an all-time high. The all-time high was like 312, 314, and that was in 2021, I believe. All right, so you're looking at FedEx almost at its all-time high right now. Okay, you would think like, holy cow, this stock's doing great. And if you look year over year, right, forget about the estimates. Year over year, their earnings for this quarter compared to last year's comparable quarter are down 2%. And this is a stock that moved 15%. Why did that happen? Because of cost cutting. Why is this important? Because when I'm looking at stocks and I analyze stocks, and a lot of people do this, they look at FedEx. Holy shit, this is great. Should I buy it? Or maybe it's getting overvalued. Maybe I should, buy puts on it. I don't really believe in the quarter, whatever. Stop looking at FedEx, because the implications of this quarter within FedEx, the implications are massive for hundreds of companies of how this company reported. Okay, it's going to influence so many companies because of the massive gain that they had. It's kind of like when in crypto, when you say that, hey, I'm buying crypto with my cash balance, what happens is, look, MicroStrategy did it, but a lot of other companies do it, and you see this pop, right? And now that you've seen this pop, other companies are looking at it and saying, wow, I can get my stock price up 15, 20% by doing this. What FedEx did here is they cut costs dramatically, okay? 16% decline in CapEx. Plans to cut another $4 billion in expenses by next year. It's a massive amount. So it's going to use this cash. What do you think they're going to do? They're going to buy back their stock, $2.5 billion in stock, including $1 billion in the current quarter. Okay. And everyone loved this news. Dan, you buying FedEx here?
No, I will give them credit. I think this is hilarious because I was working from home and I saw these numbers and I thought, we're probably not even going to talk about this. There's nothing here. And then I saw it was up 14%. I was like, well, obviously I'm an idiot. Let me go back and look and see what they did. The only thing that I feel like this proves, and I think that there's a little bit of value here to take away, is that A, the market's fixed and, all that. I'm tongue in cheek. I'm having fun there with algorithms. But there's no doubt the market is forward looking. And I think we do a good job of trying to highlight that, not to say, it's a la la land, but hey, the market's forward looking. The one thing that I think the market and algorithms are taking and running is saying, hey, after 6 consecutive quarters of no revenue growth, they're actually going to get back to some revenue growth. Granted, it's not much, but to me, I'm looking through that. And to your point, it's a cost cutting story. We're huge components of buying back shares. I get all that. However, if it's not just because they're returning to a little bit of revenue growth, I have no idea what's going on here, and I'm fine admitting that. No, I'm not buying it here because I don't really like this business in general because for a couple reasons. But I wish I would have had it 2 days ago, so we got on this pop. But no, outside of, hey, we're going to return to revenue growth at dismal percentage-wise. But, hey, give them credit. After six quarters.
Full year guidance, they didn't change it. Their full year guidance, they didn't even change it.
Right, but they bumped a little bit on the next quarter, right? Did I read that wrong after six consecutive
I'm not sure if they report
declines?
Next quarter guidance, he's reporting next year guidance. But even like the full year is what I look at.
Yeah.
The full year, they didn't change the guidance, right?
Yeah, like I said, I was surprised that this thing, when I saw it up 14% in the after hours, I went back and I read them thinking, I still don't get it. I don't know what these guys are so excited about.
Well, the exciting part is this, and I'm going to tell you, okay? And I'm going to get a little geeky here, but pay attention because it's going to make you a lot of money, okay? What FedEx did, this formula can be replicated by hundreds of large cap companies, okay? And these companies I'm talking about have strong balance sheets and generate lots of free cash flow. Now, you have to have these names in your portfolio because a lot of these names are going to be able to do this and cut CapEx. For example, if you look at the first quarter of 2024, you look at Amazon, Alphabet, Microsoft, Meta, four largest companies, spent $44 billion on CapEx for the quarter, a record. They're expecting to spend more than $200 billion for the full year. Okay, these are costs that can be cut by $1 billion here, $1 billion there, and it makes a significant difference for their bottom line. And you could say, well, I mean, are they really going to cut? Well, Meta, this is what really sparked Meta, right? When it was down 60%. It was that people want to see cost cutting. Now you're seeing the record amount of spending in some areas, but those areas are really in the growth areas, right? And they're cutting costs dramatically. And how they're cutting costs is they're cutting costs through letting employees go. And that's why you're seeing a market that's at all-time highs for the first time I've ever seen in my 30-year career, where you're seeing all the major companies laying off employees here. I think a lot of it has to do with AI, but you're seeing the efficiencies. Now, you could easily cut these costs for these companies and say if you don't have a lot of demand for a certain quarter, right? So if you don't have demand, say, you go in second quarter, third quarter, whatever, you don't have a lot of demand, you could, again, earnings are easy to manipulate legally. And they all do, all these companies. Nike's been doing it for so many years, I finally caught up to them. I was telling everyone about that, right? All these buybacks and everything, you can increase earnings so many different ways. You push these contracts, long-term contracts into further out, different quarters, when you recognize the revenue, whatever it is. But you can cut CapEx and say, hey, we're not doing so good this quarter, and cut CapEx, and you can make your numbers. And that's what these companies are capable of doing. Not only that, they're able to buy back their stock. Now, these are ways that they could prop up earnings. But if you're looking at the companies with the highest CapEx that have a lot of free cash flow, the AT&Ts, Verizons, the FedEx, Exxon, Chevron, 25 major energy companies expect to spend less on CapEx in 2024 compared to last year. Many of the chip companies, ton on CapEx, also generate tons of free cash flow, right? We just saw, several of them, right? We saw Micron blow out the numbers. We saw Avago, right, blow out the numbers. And now that they're cutting that CapEx and they're cutting costs, what are they doing with that money? What did FedEx say they're going to do? They're going to buy back a shitload of stock. Now, buying back stock right now, companies are buying back at a record pace. It's a significant advantage. So if you're looking at Marathon Petroleum, General Motors, State Street, Valero, just a couple of them, they're all buying back more than 10% of their float, which is significant. Now, buybacks are set for this year for the first time ever to surpass $1 trillion. Goldman Sachs predicts that another $1 trillion is going to be bought next year. So let's put that in perspective, okay? Just a little numbers here to show you why this is so important. The total market cap for the S&P 500 is $45 trillion. So if you're looking at $2 trillion in buybacks, it amounts to about 2.5% earnings per share growth annually, just from buybacks. Now let's put that in perspective. Well, 2.5% growth, is that much? I'm getting the average company. That number's going to be a little bit more for technology companies that are buying back more of their stock. But to put in perspective, you saw a 15% increase, right? You're seeing this surge in FedEx's price, 15%. Its earnings are down 2% year to year. Yet by buying back the stock, the average S&P 500 company is going to grow their earnings by 2.5% year over year. So that's why FedEx is buying back stock. That's why a lot of these companies are buying back stock, because it's the best use of their capital. Since if you look at FedEx, they can't grow earnings through their traditional business model right now. So how do you grow earnings? One, let me throw some of this cash and earn 4%. Let me take some of this cash and buy back our stock. And now you're looking at the formula here, which, there's literally 100 large caps easily that could do the same exact thing. Well, they're not really so concerned about this huge earnings growth. They want to see this cost cutting. And it's not that difficult for these companies to cut costs because they have so much overhead expenses. I just think this is going to lead into a really crazy market where we could have an economy almost fall into a recession next year where we're going to see this massive, massive earnings growth. Earnings growth to the likes that we've never seen, that are so underestimated because of these companies are able to increase their earnings so much, right? And increase their productivity as well. And AI has a lot to do with that. We're in a market that's very strange. Usually you see, again, when you're cutting CapEx, what does that mean? That means you're not spending money on certain things. And a lot of companies are going to get hurt because of that. That CapEx is going to affect a lot of companies, but the companies with the best balance sheets, it's fundamentals now. It's not growth. It's fundamentals that are going to drive the market over the next 12 to 24 months, where you want to see the growth component there as well. But it was pure growth. I don't give a shit about earnings. I don't give a shit about your balance sheet, right? That worked for Rivian until just now. Rivian just got a $5 billion investment, but it crushed them, even though they did a great job. Only one of the only companies that could scale EVs. Right outside of Tesla, and did fantastic. They got to Tesla's position 3 years earlier than what Tesla got there, but at higher interest rates, it takes tens of billions of dollars to have an EV strategy, and it got nailed. But now it's no longer, hey, just growth. We just want to see growth. It's the fundamentals. It's looking at the cash on the balance sheets and what these guys could do and buy back stock and increase their dividend. I mean, if FedEx could go with 15% showing year over year negative growth in earnings, what do you think these companies are going to do when they report next quarter and give their guidance for the full year? They're all going to announce buybacks. They're all going to announce stock splits, especially if there's a stock over $1,000. That's the playbook. All right. Stock split, buyback stock, dividend, and that's okay with earnings. We'll be okay if earnings aren't that great, right? You just have to have flat earnings right now. But that's a formula where your stock's at an all-time high. Just to put this in perspective, one last thing, Daniel. Sorry to go on a tangent here. Okay, so when you look at FedEx, I just want to explain something to you. It's at its all-time high pretty much. And if you look, it's all-time high at 21.22, and I have these numbers up if you're watching a video. And in 2022, they generated $20.61 in earnings when their stock was at their all-time high. Okay, you know what they're generating now? Less than $18 in earnings, which is telling you that they're paying a premium. It's trading at an expensive valuation right now. Okay, they're paying a premium for companies that are buying back their stock with good balance sheets, that are going to raise their dividend, that are going to cut costs. Because right now, if you're looking at this market, you look at the economic outlook, it's a lot slower than it was in 2021 heading there, right? So, coming out of COVID. So it's just interesting that the company was in much better shape fundamentally, did $93 billion in revenue compared to $87 billion in revenue right now. So, it's trading at a high premium, but that's what Wall Street wants to see. And if you can get your stock price up, that's all anyone cares about. Everyone keeps their job. Everybody does well. Stock price is doing well. That's everyone cares about, right? That's your everything, your bonuses, everything, right? So, that's the formula. Let's see if it happens going forward. I just thought that was interesting. That's a 15% when earnings, the numbers weren't that good, but strictly because of the cost cutting.
Yeah, absolutely. It's like the old sports saying, winning cures everything.
Absolutely. Absolutely. And it does. It really does. I mean, you want a good example of that? So yesterday I had a fantastic day. Yesterday, worked my ass off. We have an investor update out there, guys, for anyone who owns a token. So we update our Q1 financials, which are very good year over year. We're up 26%. Billings are up 26%, while our costs are down, I think, 36%. So, really good start to the year, first 4 months compared to the last 4 months last year, but I have an investor update. Just really busy. So yesterday I went home and hung out with my oldest daughter for a little while. Then I went to play basketball for about an hour and throw a football around with my youngest daughter, who's like a sports geek. And then my wife and I, it was the Yankee Met game. She's a Yankee fan. I'm a Met fan. And, and just watching that game in New York, man, I was so happy. The Mets really looked good, but it looked fantastic there. But for me, having that day was really, really cool. It was such a good day. I forgot the point I was going to make here with that because I'm like, wow, it was really cool because I'm so busy. I forgot the point I was going to make with it. But for me, spending time with the family is always really important because I've been so busy with work and everything. But anyway, I was talking about Rivian earnings and stuff like that, and buybacks and cash being king and stuff like that. But really, looking at the numbers and getting back to the point that we just got to is important that you look at FedEx is much bigger than just FedEx, guys. It's going to influence the way companies are going to report going into next quarter. And these are names that you need in your portfolio. They're going to do great over the next 6 to 12 months. Make sure you have 1 or 2 large cap technology stocks in there, 2 of the largest. Doesn't have to be NVIDIA. NVIDIA's run up tremendously, but Amazon looks great here. I think they're going to just blow out earnings. You can throw Netflix in there. You could throw, again, Microsoft. I would go with the Amazons right now, the Metas.
That's why we have a couple in our dollar stock club.
Yeah, portfolio. Exxon or Chevron. I mean, you might say these boring companies. Berkshire's buying back buying back a lot of their stock as well. These are the companies with the good balance sheets that you should have in your portfolio, along with risk. Yeah, you want a little bit of risk, but these are names that are not just safe. They're going to significantly outperform the market over the next 6 to 12 months. And I think FedEx has shown the way here, and you're going to see it coming in this earnings season, which starts in about a couple weeks from now.
Yep. You want to talk Rivian? The big news there?
Yeah, Rivian. Listen, $5 billion investment from Volkswagen, and I think it's going to be the greatest investment in the history of Volkswagen.
Ooh, look at that.
Yeah, so
there's a headline.
Look, we talk back and forth, and people think I hate EVs. I don't hate EVs. It's just I hated the forecasts because they forecasted, and California's going to mandate that you have to use electric vehicles, and I'm like, when you disrupt markets, Daniel, it has to be easier for the consumer. It has to be easier. It has to be cheaper. It's not cheaper, right? We've seen that it's not cheaper with the cost for this, right? I mean, when they first came out with EVs, especially Ford and GM, the prices were through the roof. It's not easier, but there is a market for it. There's a good market for it. Maybe it's 15-20% of total consumers that drive cars and trucks might have an EV. That's fine. But I could tell you 80%, this doesn't make sense for them. And with the forecast saying that this is going to turn to the whole EV market, I'm like, there's no way, man. This guy like me, that I would never charge my car. I just drive too much. I don't want to charge it. It makes it so easy to go to a gas station. But for other people, it's great. And when I look at Rivian did what none of the major OEMs, which are original equipment manufacturers, the Fords, the GMs, they did what none of them could do. They built a company that could scale EVs. And not only that, if you look at their trucks, they got fantastic ratings and performance. The trucks have the highest rating as a pickup truck, like the highest safety rating you can get, the only pickup truck that has it. Their products are great. When I did research on this company, and we stopped out, when I did research on a company, I got on their list. They were sending me like free tickets to car shows and different things. I mean, they're always in touch with you. It's just a really good company with good products. The thing is, it costs tens of billions of dollars to launch a company like this. They did it. They did it within 3 years quicker than what Tesla did it. And Tesla's the only company outside that could really scale these EVs. And what happened? They're sitting on this massive amount of debt, burning through $1.5 billion in cash a quarter. They had probably like $7-8 billion in cash. So everyone's looking at that burn rate, and then interest rates go up tremendously. And then you saw demand for EVs pull back, right? And it wasn't really so much Rivian because you need to spend that much money. And they had a lot of cash on the balance sheet. But, they kind of got fucked. And now you see this cash injection of a company, I feel like that was left for dead. This is a company that I could see Ford should have, Ford had a huge investment at such a cheap price and could have sold such a high price. They're out of it now. But you could see GM making a deal with it. Like they could be, instead of GM getting into all this, now you partner. I think they're going to see more partnerships with Rivian because, like Tesla, these guys could really scale, and they have good products. And now they have great technology as well. They did a lot of homework on this company. It's just the market shifted, and when the market shifted on them, they got hurt. I really think that Volkswagen, again, they're coming from behind. They fell behind in terms of EV development, but this is a fantastic deal for them, and it's great for Rivian. It gives them that cash infusion. And this company's like ready to rock and roll. You're going to see demand. I'm seeing Rivians everywhere in New York. It's, as well as Teslas. It's the only EVs I really see. I saw the Cybertruck again. It's like this gigantic, I
did see. Well, I didn't get a good glimpse of it, but I saw one drive by.
Maybe inside is cool and it's awesome. I saw a black one for the first time. Most of them are silver. But I just, and I see some of them and I look at them, and my daughters are just like, oh my God, they're just in love with it. Like kids are in love with this stuff.
It's good marketing.
Great. But for me, when I look at it, it just looks like this giant, big, I don't even know. It looks like that tank that fought Kit in Knight Rider from 25 years ago. It's just this big tank without the top on it. It just I don't know. I don't get it. But, hey, you're seeing some of them. I don't see any other EVs. If you live in California, you see lots of EVs, I'm sure. On the West Coast, you see lots more. Where I am in Florida, I don't see a lot other than Teslas and Rivians. But I think it's going to be a really, really good deal for them. What are your thoughts? I know you're not crazy about the EV market as well and stuff. It's just...
I'm not crazy about the EV market because it doesn't make any sense. And you have to start with the time you get in your car and start it with its battery to act like you're doing a damn thing for the environment or anybody else. It's a feel-good story. It's a hashtag, look at me, I'm a good person, and it's all BS in my opinion, as long as you exclude facts and the reality of things. Having said that, if you want to go buy an EV, have at it. My big point is, I think obviously Tesla's a leader. I think the market is big enough for a couple because you have enough wealthy people that like to have these other cars. The handful of people that I know with EV cars all have gas-powered cars on the end. What I don't understand, and the reason it's not taking off is because it's too much common sense, like many things in our world. I know a handful of people lately, they got hybrids. You don't plug them in. use gas. They use gas and battery. The gas, as you're driving, powers the battery. Again, you never plug it in. They absolutely love them. Love, love, love them, to the point where I would actually look at it for commuting and things like that with a truck. A mutual friend of ours that Frank, got a new truck, and he loves the hybrid. I know a couple people with hybrid SUVs. They look great. My big takeaway here is, if you're counting on this, but see, Rivian is an upscale. It's a nice trinket to have. Your average Joe can't afford a Rivian. Your average Joe can't afford a nice Tesla. These are six-figure cars. That is not a mass market car, and that's fine. You can be a premium. You know what? Rolex has stayed in business for a long time, Frank, and a lot of people can't afford Rolexes. So you don't have to be a mass market
and they're producing a cheaper truck now. So
well, they're going to try, but that's all promises. They haven't done a damn thing, and they haven't sold any of them yet, and that's fine. Then you look at huge consulting company, McKinsey & Company. They put out a consumer report, Frank. 46% of EV buyers are thinking about going back to gas-powered engines on their next purchase. Now, these sound like most people with, not a whole lot of excess cash and things like that. But I'm not saying it's the end of the world for EVs. Again, the world is plenty big enough for Tesla and Rivian. I do think those premium brands have a lot better chance than GM and Ford. They've already pissed through and blown up so many billions of dollars. If they don't do some kind of a deal or cut back like they have, then they're just crazy and they deserve what they're going to get. But when you have 46% of the people thinking about that, now let's say that's overstated by half. Okay, maybe only 25% of the people or 20% of the people are going to change. But if that happens, that is significantly a blow to all the projections that these guys are putting, these sky-high valuations or these sky-high projections about there about how by 2030 you're going to have all these electrical chargers, and because the demand is so good. Don't fall for that narrative. Do not ignore the data. You don't have 46% of the people buying these things thinking about going back as a coincidence. Now, Rivian, if I had a gun to my head, what would I do with the stock? Well, I would trade it and I would look to buy it. But if you buy this thing, you better have a long-term horizon, because I don't know the exact details on the deal, but that $5 billion is $1 billion up front. And it's throughout 2026 or 2028 or whatever. So yeah, but they do have a lifeline. This tanks bankruptcy and all that kind of stuff. So trade around it, but don't fall for this mass market major disruptor in EVs, because it's simply not there. And here's proof.
Yeah.
There. Now everybody can send me the hate mail on
No,
EVs.
it's not hate. Look, listen, I was looking at similar stats and just saying, okay, it doesn't make sense. The biggest thing I think in your stat where it was 40-something%, I think, Daniel, is
46.
Yeah, so the 46% is when you're trading that car in. Holy shit. I mean, you want to talk about the value going down tremendously. I mean, the trading values are down, that's where they're getting crushed. It's a big deal, right? Because that's what you use usually to get to your next car, right? Unless your lease is done or whatever. But if you own it, that's what happens. That thing's not worth a lot. You're not gonna be able to sell it and buy a new car. So, which people like to buy new cars probably every 2-3 years now. When I look at this market, to me, I just thought Rivian was a competitive Tesla. I think in 10 years, I said they have a shot because to get to the point of scaling EVs. And that's the thing. Everyone says they're going to do this. Now it's just, now they have the capital. They have everything set up. They have the facility set up, right? So now they could scale. They can just make these. As soon as they're ordering, they're going to be making. You're going to be able to get them a lot quicker. That's a really big deal in this market. So let's see. Because, if they capture just some of the demand, I know everyone that drives a Rivian truck that I heard of, you see the reviews on it from everywhere. Just everybody loves them. I mean, it's a good product. They like. It's high end. But they are coming out with a low price truck, and everybody says they're coming out with a low price car. We'll see how that works out. But you're right. It's just an industry where I think there are winners. I just didn't think every single company was going to be a winner. And, we were dead on in that. That's why I think Ford stock is probably a buy now for the first time. You got rid of the excess garbage. You're spending all this money on a trend that you really know nothing about, that you can't execute at all, that you bring in new employees. It's all the connections. I mean, the former CEO of Ford was talking about and saying, you have no freaking idea how many things. There's like 80 things that have to work together, right? So that's why you see recalls on these things. Like, every day is another recall. And they just couldn't figure it out. But, unlike Disney, then you see Disney, and we'll talk about Disney tomorrow a little bit more, but, get rid of streaming. It's a different company, right? It's a much different company long-term, because now you're getting rid of the excess and all the baggage, and you're seeing, look what's happened to Paramount. The deal went off the table. I mean, Goldman Sachs just downgraded. I told you to avoid that stock when it was a lot higher. These guys are struggling. I mean, isn't Paramount the one, or is it Peacock? Which one's the one that has Yellowstone? Because he's not renewing Yellowstone. I think it's Paramount. I hope it's not Paramount, because Paramount just announced they're raising prices. If you're raising prices and you lose your key franchise, again, worse service, higher prices does not translate into a good stock. Okay, it's just not going to work. But yeah, so good stuff there on Rivian, and I like it here. That's a good cash infusion, and again, they just got caught off sides, had a lot of debt. It wasn't like they were stupid with their debt. You need a lot of debt to build this, but now they're selling cars. Now they're selling trucks, right? So let's see how that works out for them, and I'm happy for them because it's a good company. I like the CEO. I like how they met a lot of their estimates it was supposed to meet. It's a company that was left for dead several times, and this is a name I think that really has a shot to be a really, really big name. And capture a lot of this market. Let's see if I'm going to be right. Last thing here, the Mets thing expectation. I remember where I was saying earnings are super conservative here with Mets. My wife's a Yankee fan. I'm a Met fan. I'm glad I lost my train of thought because I was
going to remind you, winning cures everything. See if that triggers.
Yeah, and winning
Mets.
cures everything. So Mets and the Mets are on fire right now. Mets are on fire. I think they're one game out of the wild card. After starting, they look like holy cow. They look horrible. And they look great. They're hitting. They're fans. It was electric last night. And again, me and my wife were going back and forth because she's a Yankee fan. I'm a Mets fan. But it's the first time I actually watched a baseball game in a while because watching the Mets is always really tough. But yeah, it's just like that expectations and stuff. So it's really nice to see them exceed it now. And they're doing very well. Same with stocks, same with earnings, stuff like that. But even the earnings expectation, the earnings picture is, I think earnings are super conservative. That's something I haven't said in 5 years. I think they have to be revised significantly because these companies have a way. They have so many ways now with the cash on their balance sheets to increase their earnings and cut capex. I mean, I think earnings are going to absolutely surge, and it's going to happen at a time when the economy is slowing. So it's going to be a crazy market. Definitely listen to the podcast, get more ideas and stuff, but really good stuff on that front. And again, had a great day with my family yesterday, which I needed because I've been working my ass off. So it was really cool, really cool. So, any final words?
No, we're over an hour.
Yeah, I did went over an hour. Covered a lot of stuff. Okay, so guys, that's it for me and Daniel. I'm going to
see you tomorrow, folks.
Hosting Wall Street Unplugged Premium tomorrow, both of us. And the big topic's going to be inflation, right? Sounds boring, but it's not because everyone is expecting inflation to come down over the next 3 months. The market's pricing this in tremendously. We're pricing in, hey, eventually we're going to cut rates. If it's not going to be September, it's not going to be just before the election. It's going to be December. It's going to be early 2025. I think you're going to be in for a rude awakening with some of the stats that we're pulling up, and we'll tell you exactly how to play it. Have a new recommendation for our Dollar Stock Club portfolio. So if you're a subscriber, we'll see you then. If not, visit www.wsupremium.com. You can become a subscriber for literally $1. $1. Okay. It's not a joke. It's not a gimmick. It's just most people who subscribe for $1, it's $10 a month after that. And we keep almost every subscriber because the details, the recommendations, the portfolio, the performance in Dollar Stock Club. It's really a trading portfolio that all competitors charge thousands of dollars for that you can get for $10 a month. So yeah, we want to get more people exposed to that. It's more education, more stock picking, and a performance and a track record and stuff like that, which is really cool for Wall Street Unplugged Premium. But we'll see then. Daniel, if anyone questions, comments,
Daniel at CurzioResearch.com.
And for me, it's Frank, CurzioResearch.com. Guys, again, last thing, that Curzio Investor Update for our token is CurzioEquityOwners.com website. Definitely take a look at it. Lots of good things coming up. We explain our growth plans and everything. I do a nice video on it. It's really cool just to see the health of our company, how you put an equity subscriber. The token is representative equity. It's not a utility token. It's an equity token. It trades T0. A lot of positive developments with what we're doing right now, including some of our investments that we made. So really cool stuff. So talk about that a little bit more tomorrow, and we'll see you then. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. Put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. The big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today, and you won't miss a thing. That's WSUoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.